No.
So it's really going to get worse before it gets better.
That's some people's forecast, but there's other people who are already forecasting that the Fed's done too much and that we're going to start seeing it pretty soon. So what caused the problem today is that what's called the JOLT report, which is the job openings report, came out, and there was expected to be 8.8 million open jobs nationwide, and it's actually 9.6 million. So there's 800,000 more jobs available than what they predicted. And so that's a sign that the economy is still strong.
Right.
Employers are still trying to hire. Now, we were just talking about this earlier. It was like, where are these jobs? I'm not seeing this. Are you seeing this? Do you see job openings? I know that's anecdotal, but it doesn't seem to me like there's as much shortages as there used to be when we'd walk into, a restaurant and we couldn't get seated for half an hour because there's no servers. Maybe it's geographic, maybe it's more in our location, but it just seems like there's a disconnect between the data and what's actually happening.
Right.
But time will tell. I look at things like, wage growth is slowing. Personal savings is down.
Yeah.
People are running up their credit cards. Credit card usage is moving up, and it can't continue to do that for much longer. People are going to run out of money pretty soon, and it's getting more expensive to borrow it. So something's got to break, and we'll see. But yeah, it's kind of a crazy.
It's a little scary too, because we see a lot of fear and propaganda in the market, and we always say, especially working in finance, it's usually priced into the market. And I think the sentiment, everyone's waiting for the shoe to drop, but it's been so long now. Is it going to drop or is it not?
As far as a recession?
As far as, the recession, yeah, it's a little different than the real estate market, which is kind of from my perspective. But a lot of the people, if you look at it, generally speaking, yeah, it's a scary time in the market. It's extremely tough. If you're not heavy in good cash flow and you're not making good income, you really can't afford, even if you were 3%, to be honest. Because a lot of the people that I know, they're not making more than $80,000 a year combined household income. I have a few clients that are very well making 6 figures each, and those are the people that are able to afford. But even then, you kind of see them struggling right now, and trying to make ends meet and make the ratios work. So it is interesting. If we look at it from another perspective, I think the last time I checked the report we're at 1.9 months of inventory. So if we go back, just simply supply and demand right now, demand is still high. People are still trying to, want to be a homeowner. They just can't afford to, or they're getting beat out. You see a lot of the competition where you're kind of between $300,000 to $500,000, $550,000 is where it's the hot market. It's where everyone's looking to buy. It's where they think they can afford. Realistically, those buyers that were in the $500,000 now, when you run their numbers, they're more than $400,000.
Yeah.
Right. And so it's like that middle class, or the working folks. Those are the ones who are having a hard time getting into it. And I think in the last 6 months or so, when you look at the market, anything 800 and up, 700 and up, it's kind of back to normal. You see them sitting on the market, people that are, good incomes, upper level executives, or they're making good money. The upper end market is staying where it is. It's the people in the middle that are really getting beat out.
That's a good point to make about the upper price point being back to normal, because I think a lot of people don't remember what it was like to be in a normal real estate market where homes sat for 3 or 4 or 5 months. They used to call 6 months a neutral market.
Yeah.
I think maybe we don't think about it that way anymore, but because now if something sits for 6 weeks, there's a price cut.
Yeah.
But we have to get used to this new normal. But I think what's rocking people is the rate at which rates are going up, the speed at which they're going up. I think what we're all looking for is just a moment where things just chill for a second. Right now there's a lot of volatility. There's a lot of uncertainty in the market. The Treasury running up, to 480 or whatever it's at today. I'd have to go back and look, but I think it was less than 2 months ago we were under 425, and it's just that's a massive.
In June we were in the threes, right? 3.5, something like that.
Maybe. I think we had a dip down under 4 for a bit. Yeah, I think maybe briefly hit 350, but it was under 400 for a while. We thought that was a threshold. Then when it broke that, we're like, okay, well, it's definitely not going above 450. That's a hard resistance point. And it just walked through it like it wasn't even there.
Yeah.
And so I think that's got people a little bit rattled, but it's human nature to always project. So we see 5 days in a row it's gone up, that must mean it's going to go up for the next 5 or 10 or 20, and that's just not how it works. But we'll get to a point where things settle, and I'm surprised it hasn't happened already, but it will.
I got my back to it. No, I think it's crazy. I think for us,
Are we recording? Yeah, cool.
I think for us that are in the business, I mean, with professionals like yourself, and then kind of just seeing the market on the real estate side of things, it's very different. I think we always have our finger on the market because we're constantly interacting with people where I think the numbers just don't justify that, with what you're seeing. And it goes back to what you were saying earlier, where the numbers are showing one thing, there's a lot of fear out there, but in fact, in local markets, I think is where it's hard to quantify that when you're looking at a big picture. And so I know a lot of people here, especially, I think I was reading something where it was saying Vancouver was one of the top 3 cities that's being developed right now. We have so much growth going. Our county is huge. So Ridgefield is growing, Washougal is growing, so multiple waterfronts. We see that where other economies, especially like I have family in New York, in New Jersey, they're struggling right now, completely struggling where they can even afford a house, like period. And all of a sudden, like, well, you guys are always cheaper. It's like, well, come up here. In the last 2 years, we've had so much growth that our houses are now comparable to yours. We
were just talking about this earlier, how
I feel like
for the first time in our career, mine's a little bit longer than his, but for the first time in my career, which is, adding mortgage to real estate investing, approaching 25 years, I've never seen houses in Vancouver cost more than houses in Portland.
Yeah.
And we're starting to see that now. So Clark County is in a little bit of a unique situation with a lot of these things, so we do have to take that in consideration. We always like to go back and focus on data, or at least I do, because data doesn't lie. Data tells us the real story. It sometimes combats our emotion, and I find it to be helpful to ground me at times. But at the same time, nationwide data is not Clark County data, so we have to make sure we look at both. But we actually just went through an exercise where we were looking at Clark County mortgage volume. So we focus more on mortgage than just on real estate. Our business is down more than the real estate because we've also lost refinances. So we're down 77% roughly. Mm-hmm. But if we look at where we're at, volume-wise in Clark County for the last 12 months, and we factor in the expected additional attrition of mortgage people in the next renewal season, which is coming up, and add to that the expected bump up. So 25% additional attrition. Fannie Mae is forecasting 20% additional volume next year, an increase over 2023. When you compound those two things, you get a 45% increase in mortgages in 2024. That's a promising number. Now, those are just forecasts, and a lot can change, especially if rates keep going up. But I think data can help, but it can also, cause fear if we just look at volume's down. Well, sure, but there's also less people in our business. So we should be getting more, what's the word I'm looking for? More market share.
Yeah. Right.
So
gotta find your wins in different places now.
Yeah.
I think you just have to be creative. There's a lot of it too, and I almost blame this on the real estate industry. Not blame per se, that's probably a worse word, but I think going back to a comment you made earlier, and we have like a group chat with me and my fellow brokers at the company, where every Monday we get together, we talk about what's going on, what's new. I'm also part of like different groups, which vice chair and things like that, where you're constantly talking about the market. There's an underlying thing that's going on where, going back to people that haven't seen, houses sit on market for 36 days or upper end houses, which, buying in $1 million, it's still a lot of money, and that still has value to it, where people were just overpaying in the past 2 years, kind of in COVID time. But a lot of it too, I think it's the agent leading the clients. The majority of those agents that are in the market right now, forget the people that have been for so long. Those are people that know and have seen multiple markets. The majority of the agents don't know any other market.
Yeah.
They really don't. It is point. Like you, and if you think about it, you guys are the experts on everything else in real estate. For us, we, in terms of working in finance and getting the loans ready and knowing the numbers and so on, we're the face of it when it comes to people and seeing their fears. And they're like, if I have a listing right now, if it was not for me setting the right expectations that what you experienced is an anomaly. It's a wall up in the market. It's not something we'd expect to see again. We hope we don't see again, right? It's made a lot of people a lot of money in short times, but it's not reality. And I think the majority of agents, where I do have a background in finance and business, so I can relate on a bigger picture, right? And I've been very fortunate enough to have mentors in my life that really have taught me, be patient, have a good marketing strategy, be a fiduciary for your clients and take the time to understand what they want, big picture. And that's how I advise my clients. The majority of agents are like, I'm freaking out. I don't know. I don't get an offer. I didn't price it well. It's like, well, it's not just to stick a sign in the yard and put a price on there and throw it out for people. And I think as real estate brokers, it's our job to properly educate our clients, set expectations, help them go through the market, be creative in how we write the offers and how we get them into the goal, right? Rather than focus on what's going on, kind of the selling sunset feel, all this whole popular website that's really glorified our job. In reality, it's not always that sexy. And it's more about like having a broker that's doing the research, following the market, talking to professionals like yourself who are educating us on more of the numbers that we don't always have, looking at what the NAR is coming up, the RMLS market trends. There's a lot more to it. And I think if you look at that approach, there's a very small amount of brokers that do that. And the majority are following what they see, and it's easy, and it's hurting our industry in a way. Yeah. And I think that's also causing the fear of what we see on social media. People nowadays, unfortunately, they're not, my clients do as much, and I try to be that value there for them and give them that value in terms of what's going on in the market and asking me what they can and can't do in questions. But people are getting information from social media.
Right.
It's Instagram, TikTok, Facebook, what else?
Oh, we talk about this all the time, and we want to make sure that we do as much as we can to help get people the information they need so that they're getting the right kind of information.
Because the other information is false. It's not accurate.
Yeah. I don't know how often I hear an agent say, or somebody say their agent told them, I hear home prices are dropping 10% a year. And I'm like, where? Because that's not happening here. Yeah, maybe it will, but it certainly hasn't happened yet. So
I have clients that come to me, and I always joke around with my Middle Eastern clients because they're tough. And they are tough, but they make me better in every way. So let me just cover all the Arabs out there. Sorry. But the reality is they're always trying to find a good deal. And it's within our nature, if you will, to try to haggle, to try to negotiate, get a good deal. But some of the comments I hear regularly, it's like, we have to time the market. We really want to make sure we are getting the best deal. What if it drops? I said, you have to think big picture. Mm-hmm. If anyone, period, and I'll say this to all the professionals much better than I or those that are starting, is telling you to time the market, you are being misled 100%. Right. Timing the market is never good. And we never did it in finance. You don't do it in real estate. You have to look at a big picture with what your windows look like, time frames, your financial goals, and what that's going to get you. Mm-hmm. And really, that's how you should be making a decision. If you can afford to maintain this payment for the next 2, 3 to 5 years, you should not even be shopping. And there's times which, unfortunately, it sucks because we're commission-based. We want to make sure we advise our clients. But there's times where I've told my clients, literally, this is a bad financial decision for you. Right. They said, you've hired me for a reason. I'm trying to help you out here. Forget me that I'm your friend, or you've known me, we've had that relationship. Take my professional advice. You're sitting pretty right now. Maintain what you have. Let's revisit this conversation next year. And there's times where they're like, probably right now, and I always say, fall to winter is my favorite time of buying. You typically get better deals. You get more serious buyers. And right now I tell my clients that if you can make it, even with the high interest rates, and you can qualify, even if your financial situation is not strong, but you can push through and maintain it, and you really want to buy a house, it's your first time, do it. There's one right now I'm helping him. He really wants to get it, but he's just either trying to time the market or he can't understand. Obviously, I'm not going to push him. But I said, right now, it actually makes perfect sense for you to buy. Because the minute the rates drop next year, 6 months, whenever that does happen, right, you're not going to be financially ready to buy. And you're going to be competing with people that have more capital on hand, that can afford to beat you. They can get better terms. They can negotiate. Right now you have a good amount of options to buy, and you can afford it, right? It may not be at your best price, but if you're comfortable with it and you can make it happen and you're investing in the long-term plan, for you, it's a good time to buy. Yeah.
Yeah, I think it's interesting how people try to time the market. You've called me an expert. I don't know that I'm an expert, but even the people that I consider to be experts can't time the market. So I don't know why any of the rest of us think they can. It's just, same kind of thing. What I tell my clients is that if this makes sense for you and you are comfortable with this payment, then let's move forward. If you need the rates to come down in a period of time in order to qualify, then don't do it, because I can't guarantee that. We think rates are going to come down at some point, but we don't know that, and we could be wrong. So
I think people don't want to stretch themselves too thin.
right. Some people do. A lot of people do, actually.
Well, they're going to look back at that home that they wanted to get a deal right now, 2 years, 3 years. They're going to look back and be like, wow, I got a really good deal on that. It's always going to with our inventory and how, I guess we shouldn't say always. If we hit 20% interest rates, maybe not. But
I don't think it would take 20, but we have seen markets, and I'm older than you, obviously, but I've been through a housing recession. There hasn't been a ton of them in our history, but we have to be careful, because there were people before those recessions saying it's always a good time to buy. It's always good. And there are times when home prices come down, and we may be approaching one. We don't know what they're going to ultimately do with rates. We don't know what's going to happen with the economy. The general consensus is a soft landing. I don't necessarily agree with that, but even if we do see a correction in home prices, there's so much foundational demand that it should be somewhat muted, but we never know.
Yeah. And I think that's exactly back to our original comment. I think we're behind 10 years in development. At least that were the numbers last time I was looking at. And so in Clark County, we're growing so much. We have a lot of people coming from California and Oregon. I can't tell you how many clients are literally leaving Oregon, just everything that's happening right now in the market. They're just trying to get us somewhere where it's safe, friendlier, tax purposes. And just, we never thought Vancouver was so desirable. I hear that all the time. And from friends that think they're so far, and they're literally in Gresham or Beaverton. It's 40-minute drive. We're not that far. We have family. My family originally were in Beaverton, come up here, and then we're in Camas, Washington. So to me, Vancouver and Portland was never a travel. It's just you cross the bridge and it's just another city. Right. It's that simple. But now I think there's just been, with everything that's happening, the crimes in downtown Portland, the things that are happening with Multnomah County, a lot of people are just leaving. They're just we're not happy with this. We can find better opportunities here. And they've seen more growth in Vancouver and Clark County and kind of moving up north than they have a little bit more in Oregon. And so,
by the way, you'll get an instant promotion on your tax savings. So
9.2%, right? I think
it doesn't hurt
for income tax.
Yeah, well, something like that. I don't know, too much.
And some people travel for work, and it's interesting.
It's going to be interesting to see how that works out, because we've not only do we have a lot of people moving over here, which is kind of floating the market in Clark County, I guess is the best way to put it, but same thing's happening on the commercial side. We were talking about this the other day. So many businesses are moving over here that there's just not a lot of commercial space. And so it's an interesting thing, because we're trying to negotiate a space, and our corporate office back in North Carolina is like, what are these terms? You can get way better than this. You know how soft the commercial market is? And I'm like, not here.
Right.
No, I have clients we're under contract in a commercial building right now in downtown Vancouver. And they're fortunate enough where they're able to, hopefully we'll be closed to buy it outright. So they're not going to have a deal with that, an issue. But they're just if we could just secure something in downtown, we're good to go.
So the commercial sale
It's a commercial sale, yeah. It's a small building.
Is it also pretty tight?
What's that?
Is it also pretty limited in terms of commercial real estate sales?
It's different. So I primarily focus in real estate, but we're always able to do commercial. And I have a few people looking for buildings where they're not necessarily looking to lease it; they just want to buy and figure out what they want to do with it. Yeah. And these ones are restaurateurs. They've had multiple restaurants. They're looking to do something within the same vicinity in that kind of sector and go from there. But they're just we're ready. We want to buy it. It's the amount of growth. They see what's happening in downtown Vancouver, all that jazz, and they're going for it. But I had another client who I did refer out. They were looking for a lease because their situation was a bit different, and they were saying very similar things. It's really hard to find. The cheapest I think is 24 a square foot, 25 a square feet for the majority, and they were struggling to even for that.
Well, and everything we're seeing is I don't know if I should say this on the podcast, but we're seeing kind of what's left over. These are the spaces that nobody else wanted. Yeah. Almost, not all the time, but a lot of the times.
Yeah. I'm gonna back us up because we just jumped right in and want to get our kind of intro, if that's cool. We might be able to just take that first conversation, stitch it into the backside. Whatever you guys think.
Videos real quick to clip it, just so we have a stop point.